How's it going, everybody? Today is December 3rd, 2024, and I'll be doing a daily market review today. So I'm trying to do these consistently a couple times a week if I'm not actually taking trades, just to give an overview of the market. When I first started, especially using ICT concepts, to get someone to slowly go through things that they saw or trades they took would have definitely helped me out. So not only is this good for people watching this video, but it's also good for me. It's like my journal. So I'm going to be, again, trying to be doing these a few days a week. Today, let me see here. We actually, so this week we have NFP week, right? So let's pull this up. Tomorrow we have non-farm employment change, ISM PMI, and Chair Powell speaks. Unemployment claims Thursday, and the non-farm payroll on Friday. So this, as you can tell, it's been really volatile and choppy, especially choppy today. Yesterday or Monday, there was a huge run up kind of out of nowhere, which is kind of normal for non-farm payroll weeks. So tomorrow I'll probably look in the AM till about noon, and then I don't know if I'll trade the PM sessions. Thursdays I usually don't trade. I'll kind of look around and see what's out there. If there's an A plus setup with higher time frame PD arrays and narrative, then I may look at something, and then I won't touch anything till after the news, 8:30, probably till 9:30, 10 on Friday. So today I only took one scalp. It was really small. I think it was like 30 something points. And I scaled out and had a stop loss that hit a couple points back. But I did see a couple other trades today because, working full time, I don't get to look at the charts 100% all the time. And both of those trades that I saw were in the morning. So today, let me pull up the charts. For the daily, right? So yesterday we had a huge run up, and after a huge run up like this, we can expect to see prices, price action consolidate. So going over here into the 4 hour, this is what I was looking at in the morning when I was able to look at the charts. So we had a 4 hour fair value gap, and oops, sorry about that phone. And then price action right before the bell tapped into this and moved up. It was really choppy throughout the day, as you can see. Look on the 15, kind of up and down within an uptrend, and 5 minute also a lot of choppy consolidation in an uptrend. So knowing that, I will kind of go through the trades that I saw reviewing price action from today. So the first trade I saw was going into around 850. So we had a 4 hour order block that had formed in, I think it was around a little bit before midnight last night, and carried over. And as you can see, price action came in here within the 850, 910 macro, right? So I was looking at that. Notice that the consequent encroachment of the 4 hour order block was holding. And then also we had an SMT, and there were a few relative equal highs here that got taken out before this move actually started happening. So we had price that moved down. We formed a inverted fair value gap and a fair value gap here. Price action push down and then back up into the fair value gap, consequent encroachment of the inverted fair value gap, excuse me, guys, and then the consequent encroachment of the fair value gap on the 1 minute held also. So you can see here that this would have been a great entry, right at the, you could even have got here at the bottom of the 1 minute fair value gap and set, your stop loss up here or above the 1 minute fair value gap, or the consequent encroachment of the 4 hour order block, just depended on, what your risk to reward is. And then also, the threshold that you have for a stop loss. How many points do you want to actually risk? So that would have been a great entry. And here actually price came back up, excuse me, back up into the fair value gap again, push down, and then here would have been a great. I always try to take partials at the -2 standard deviation, depending on the time frames I'm looking at and how far I see the move going. Usually, I'll take 50 to 75 or 80%, about 50 to 80% on -2 standard deviation. So this would have been a place where I would have taken partials. And then also here pushing into, this was the 4-hour fair value gap that we just showed earlier. So right here. And then if you were holding to the bell, you could have got another partial here at the -3.5 standard deviation. So that was the first trade. And those were kind of, that was the way that I would have traded this trade in this price action. So that was the first trade I saw. The second trade here was actually price action that came out of this fair value gap that we would have scaled out at, right? So this was a 4-hour fair value gap that was hit. Liquidity was taken. SMT was formed right at 9:30. Price action pushed up. We formed a market structure shift, also an order block and a fair value gap. Price came back into this fair value gap and tipped this order block. But also you can see here that the equilibrium was hit from this swing low to this swing high. So that would have been a perfect place to actually get your entry. That would have been almost to the tick. And for this, I would have actually just held to New York high a day, because it also coincides with the -2 standard deviation right in there. Or you could have held for that. I personally would have just held for the New York high of day. And knowing that it was NFP week and price has been extremely choppy and we consolidated through the entire night, that would have been the way that I would have taken that trade. So those were the actual two trades that I saw this morning that I missed because I wasn't at my charts. I was actually working. And here is this is the narrative for the scalp that I actually took. So this was going into 11:30 time, and we had just taken buy side liquidity on the daily, and we had SMT. So those are three strong confluences. And then also we were at 11:30, right? So 11:30, you want to look for price action to take out the lows or highs that form after 10 o'clock. Does price always go down to 10 a.m. and take out those lows or highs? No, but there's a very good chance with these confluences that I knew that price was going to push down, right? So when price came, excuse me, we created a breakaway gap, then moved down here, formed a fair value gap, and right here is when I got in on my institutional order flow entry drill, right? As soon as it came back up into fair value gap, I actually entered. And then knowing that price had been choppy, I came down, took a partial at -1.5, excuse me, then -2 standard deviation, and then price came back up. As soon as this candle pushed up and took over the open of this order block, it formulated an order block. I knew that price could probably continue, so that's where I got out of the trade. I think it was 21-11. But this was the actual trade. So here are the actual executions here. Why is this doing this? I don't know why this is doing this here. Let me see if I can push this over. Sorry, guys. Here we go. So this is the actual executions. It was a 6.41 risk to reward trade. And again, this is a smaller trade, a scalp, 35 points. Normally my trades, I try to get at least 50 to 60 points. And if I'm a longer trade, I don't try to scale out to at least 30, 40 points in my first PT. I don't do mini scalps at all, but knowing the price action the way it was today, I wanted to get out as soon as possible, knowing that price could return back to the upside and that we had some other buy side liquidity on the daily that was still there, that was close within like 60 or 70 points after lunch, like around 1 or 2, and it eventually ran through, as you guys know, and catapulted up and took out that buy side liquidity and pushed up, I think, to around the 320 mark, 21 320. So that was it in a nutshell. Again, I'm trying to go through these and on days that I don't take trades and give you guys a synopsis of what I saw. I was going to do a breakdown trade, but that scalp was really small and it probably would only take me like 3 minutes to go through. So I just wanted to incorporate that into this video. And moving forward, I'm going to try, like I said, to continue to do these, go over any information that I see throughout the day that I included in my trades. Again, because this doesn't just help you guys out, it helps me because it's like my personal journal. So if there's anything that you guys want to see, I'm going to try to start doing some, at least once a week, some ICT concept videos like on order blocks, smart money concepts, or excuse me, SMT, fair value gaps and things of that nature, and kind of go through the PD arrays and the things that I use, standard deviation, because I know there's dozens and dozens and dozens of different types of ICT concepts. And for me, I've been doing this for a year and a half, and I actually learned way too much, right? So I have several things that I use. I keep it simplistic and super easy. And I think that's the way to go, because the harder you try to make stuff, you know, especially within trading, it just is going to, you know, when you're in a trade, you're going to be thinking about 20, 30 different things rather than just the things that actually work for you. I think you just have to pick the things, the PD arrays and the concepts that work and fit into how you think and what you see on the charts. So again, I'm going to continue to try to put these videos out, and I will see you guys on the next one. Have a good night.